All right, so real estate over or the stock market? That is a pretty common question a lot of people are considering. If you have some funds and you're trying to figure out where to deploy them, and you ask yourself, do I put my money in the stock market or do I go out and buy a piece of real estate? I'm going to talk about the two, what are the pros and cons to weigh for each one, and what you should consider when you're making these decisions. First thing is S&P 500, it's a very stable way to invest. It's liquid. We'll go over some of the pros, but it does about 8 to 10% on average over a 30-year period. So if you're going in thinking you're going to invest for, I don't know, a year or two, you got to be careful because as we can see here, stock market, it fluctuates year by year. So you might have a year that does 2.1%, and that's the year you invested in, or minus 4%, or you could have gotten the 13 year or the 32 year. So if you're only going for a year or two, you got to be careful going with the stock market because even though most years, as you can see, are green, there are red years. And if those are the years you're invested in the stock market, if you have it over a 3 year period, or then that's the return you're going to get because you went in and took a snapshot rather than averaging out. But over a long period of time, it's between 8 and 10%. Okay. So there's a couple of things now. Obviously, if you know me, if you've watched anything else, I'm a real estate guy, and I'm going to go over why I'm a real estate guy. But the stock market has its pros. Okay, let's start with liquidity. With the stock market, you can go in and decide I want the money, and go in and grab that money and pull it out. Real estate doesn't have that. It takes anywhere from 3 to 6 months to sell a property. If you price it right, maybe if the market slows down, it could take up to 8 months to sell a property. So that is one of the biggest pros that the stock market has going for it. One of the cons is that if it's a short period of time, you got to be careful. Honestly, with either, whether real estate or the stock market, you got to be careful. The other thing I got is that so the main reason I prefer real estate over the stock market is cash flow. So every month, these assets aren't just going up in value 8% per year. Let's say you have a real estate asset and a stock portfolio. And if they're going up 8% per year as the value of the asset, but real estate will also kick off cash flow during that time. Stocks may give out dividends, but for the most part, it's a very small, it pales in comparison to rents. So as you can see here, these are all the rents that I've collected in my portfolio over the last, 30 days. And these are just tenants, whether they're retail, whether they're apartments, and they're just depositing money every month through their online portal. So you get cash flow with real estate, and that's money you can live off. That's money you can enjoy. That's money you can save to buy the next deal. It gives you more options. So in a way, that is liquidity. It's not liquidity of your initial investment, but what it is it's ongoing liquidity while the investment is still getting its own return. The next reason I love real estate is leverage. So you can leverage in the stock market, but it's a lot more common and you get a better, more favorable terms when it's secured by a piece of real estate. So for example, let's say you're trying to make a decision. You have 100 grand, and you're trying to figure out where to put that money. Okay. So you have two options. You can go with the stock market unlevered, and that 100,000 is just going to be 100,000. Or you can go with a piece of real estate where you could put 25% down and get a $400,000 piece of real estate with that same 100,000. Okay. The return, let's say you're getting 8% return on the asset. That means your return from the stock market is going to be 8,000. Your return from real estate is going to be 32,000. But you leverage. So you gotta pay your interest on that debt. So at a 6.5% interest rate, which is, we're in April 2025. So right now you're probably going to borrow at 6.5%. That means you're going to pay $19,500 is going to get taken out of that 32 as your interest on getting this 400. Okay. So that means your total cash on cash is still higher, even at a 6.5 interest rate, your cash on cash return. So you can make more return from the same amount of money by getting into real estate. You combine that with monthly cash flows, and it's almost a no-brainer with that. You can get checks every month. On top of that, you can get higher, if assuming the same return on a piece of real estate versus the stock market, you can get higher return. Now you can leverage, like I said, you can leverage the stock market, but it depends on how much what's your rate going to be on that. You can leverage the stock market as well. So it really talks about you know what are your goals, how long you plan on investing. The last thing, and I think this is the biggest reason that I like to invest in real estate over the stock market, is control. I can control whether this is going to be 8 or 10 or 12 or 15%. I can, by getting a good tenant, by cleaning the building up. Is it work? Absolutely. Absolutely. So the stock market is, there's nothing I can do unless I'm a CEO of a Fortune 500, unless I'm the CEO of a $3 trillion company. I have I have no effect on this. I can't take this from 13.7 to 15 by doing something day to day. I have no control of it. But real estate, through day to day operations and working with contractors and working with leasing agents and filling a building up, cleaning it up, making it a better place to live or operate your business, I now can increase this number by two, three, four times, and I can control that. But on the other end of that, some people don't have the time or energy to really go out there and try to stabilize property on their own. It's, there's risk involved. There's risk involved with the stock market too, but there's definitely risk involved with real estate. But you can mitigate that risk through actions, through operations. But just like the real estate market could crash, the stock market could crash. That's a threat for both of them. But there are things you could do in the real estate market to either mitigate crashes or expedite returns by taking action. So if you have the time, the capacity, then you can go out and you can stabilize real estate, which is what I do. I buy real estate, I stabilize it. So I'm getting, 20, 30% increase year over year on these assets because I stabilize them. While that, I fill them up and I start getting, checks every month from the tenants that are moving in. I pay off the this interest expense here because I'm leveraged, and I can still make a higher return compared to the stock market. Yeah, it's illiquid, so I can't just say, oh, I want to, I don't know, buy a house next month, or I want to go on vacation in 2 or 3 months. I can't say I'm going to use money from the real estate. I can use the cash flow, but I can't go out and use the equity that's in it, the equity that I built up. Stock market, at any time you can choose down or up. You can just say I want my money, and then it goes from there. Within 3 days, it's in your bank account. So that's me going over. If you're deciding, a lot of people are deciding between the stock market and between real estate. And I hope this helped you, make a decision, make an educated decisions. I post real estate content where I go over the properties that I buy and how I make them worth more and how I collect those cash flows and stabilize them. If that's the kind of thing you're interested in, I hope you enjoyed this video. Like it, subscribe, watch some of the other videos I've got up there, and I will catch you guys on the next one.